It is no surprise that all the experienced and knowledgeable men of the business world are cautiously warning us of difficult times about to happen in the near future. And this is critical in the case of business owners and those owning stocks. Several famous investors, such as Warren Buffett, Michael Burry, J.P. Morgan Chase, and even the triumphant Charlie Munger, admit to foreseeing tough times ahead. Advice from the greats should definitely not be taken for granted, don't you think? Today, we're going to take you through Michael Burry's shocking prediction of what could happen in the last 3 months of 2022 and how we can overcome those tough times with a little bit of help and advice from him. All right, folks, let's get right into it. We are well aware that the financial economy today is under great inflationary pressure, and inflation being mostly disadvantageous to the economy is putting the United States economy at great risk. All the famed investors and businessmen strongly hint at the speedy deterioration of the United States economy in the times to come due to the high inflation in today's financial industry. Some of the other reasons for the United States economy to deteriorate are an interminable war in Eastern Europe, chain interruptions, a collapsing house market, and many more reasons. We've all heard of Michael Burry's predictions in the past, and all of us are well aware of how most of the time the famed investment guru is always in the right. A little earlier this year, in the month of August, Michael Burry predicted a bear market rally has almost reached completion, and we were heading towards a new bottom. To everyone's surprise, the market has been down since that date by a 17% decrease. This proves well enough that Michael Burry sure puts a lot of thought into his predictions, and it is not just some vague assumption he puts forward. He specifically uses the term doomsday for what is about to come. But today, we aren't here to scare you. We are here to let you in on the wisdom of Michael Burry and how he can guide us out of this devastating economic condition. Fear not. Even though the world is heading toward recession, and we might be entering a massive market crash, Michael Burry has a couple of tricks up his sleeve to keep us safe. The grave condition of the U.S. economy is indeed frightening, and according to Murray, we're looking at the U.S. economy currently on a knife's edge. Burry does notice some specific overvaluation too. He states that the times now, in comparison to earlier times, have become more exciting, energetic, and filled with enthusiasm. And what he means by more is more conjecture. People have been taking risks and concluding into challenging business opportunities before they even know it. There has been a lot more conjecture compared to the 1920s. A greater percentage of valuation than in the 1990s, and way more conflict and discord in terms of geopolitical and economic ways. Now, in order to overcome these sorts of troubles in the near future, Michael Burry has detailed his studies and wisdom in a graph scheme. In this graph scheme, he represents a slide of the dangerously steep SP 500. Currently, the inflation rate of the SP 500 earnings is a whopping 36 times more than the previous SP earnings. Now, that is a pretty substantial increase. The graph depicts how we surged to an all-time high in the month of January, and that there is more to go higher before we hit rock bottom. Now that sounds pretty frightening. In a recent tweet by Michael Burry in the month of September, he states the closure of 2 exchange-traded funds that followed special-purpose acquisition businesses. One of the investment schemes that have the attention of tons of retail traders during the epidemic bull market is SPAC ETFs. Fast forward to the present day, which is 2 years later. These SPAC ETFs have undergone a significant amount of recession and have already made it to bankruptcy. Murray constantly warns investors about the drastic recession that is about to take place. Now, though, there haven't been a lot of interviews with Michael Burry on television or even YouTube channels. He has definitely kept us interested in the last few years through his Twitter profile. One of the very obvious tweets he made that a lot of investors have taken into consideration is how passive investing has removed price discovery from the equity markets. And we all know how well that happened. Just a few months into passive investing, we all observed a great increment in the United States economy and watched money flood into the top 500 companies in America. People investing in the indexes when inflation takes place is exactly how the economy lands into the dangerous bubble territory. Now, this doesn't apply to all countries and continents. Murray observes some significant undervaluation in certain countries, such as Japan. But when it comes to the United States of America, He mentions time after time how the economy is particularly hot at the moment. So according to the famed investor, though he is American by nationality, he strongly advises people to make investments elsewhere, and not in America at the moment, due to the economic crash expected in a while. To make a good deal as of now, it would only be wise to sow your seeds of investment in other economies. Now there are probably some of the wisest words that Murray has advised us, as this could be life-saving in the year 2022. There are hundreds of thousands of good investments currently found abroad and in other nations, which is why it would probably be a better and safer move for the coming months. But then again, there are the horrors of inflation that we have to be cautious about. Murray mentioned very clearly how the US government, instead of inhibiting inflation, is inviting inflation with its MMT tingle policies and trillions of dollars of money, plus by reopening to boost demand as employee and supply chain costs skyrocket. From a mere inflation rate of 1.7%, the rates have tremendously progressed to now a whole 7%. This clearly shows that Michael Burry sure knows what he's talking about, and that his calculations are based on pure logic and aren't mere assumptions. Now, a good explanation for this is that when inflation rises, the most sensible measure for the Federal Reserve to take is to increase their interest rates as well. This is due to the reason that on a rise of interest rates, the bond prices fall. Though this reasoning may have been quite accurate for the time, things did not play out as planned. Since the federal bank delayed taking these measures soon enough, they did not make much money out of this trade. As we all know, this great finance guru isn't very particular about cryptocurrencies. He has tweeted multiple times about how he feels cryptocurrencies like Bitcoin and Ethereum are just a bunch of moneymakers in big bubble territory waiting to explode. He also mentions that crypto, which is obviously just a big bubble waiting to pop, is only being fueled by leverage and nothing more than that. Those were some of the things to keep in mind about the last few months of the year 2022. Though the economy can expect a sudden crash or recession, it is critical for investors and entrepreneurs to stay up to date with all the latest predictions and statements based on upcoming events. Alright guys, those were our thoughts on Michael Burry's prediction for the last few months of the year 2022. We hope this video helped you with your financial journey to success and reduced your chance of experiencing the horrors of the economic crash. This video is not entirely based on professional advice and is only purely made from our own resources of knowledge and our own opinions. See you at the next one.